How's it going, everybody? It's Stock Picks by Tim, and I've got three stocks for you today that I'm going to get into. One that I've never talked about before, and it was a request of a viewer, and a lot of people have actually been talking about it. First off, we're going to get into Astra, and they were awarded the VADR contract, but there's a bunch of other companies, and I'm going to show you that in a second. This contract is a 5-year ordering period with a max total value of 300 million, and it will be managed by the Launch Service Program at the agency's Kennedy Space Center in Florida. The new contract is in addition to the 4 launches that NASA has already contracted with Astra for delivery this year. All right, so now you know Astra has 4 launches, and they are waiting still for the approval by the FAA to launch. They already did their static launch, and things went well. So next up, we're going to get that approval, hopefully, and we will be off to orbit. And this quote here comes from Bradley Smith, the Director of Launch Services at NASA. We are incredibly excited to announce the awardees for VADR from a broad range of established and emerging launch providers and launch service aggregators and brokers. This speaks to our expertise in understanding the launch market as we crafted VADR to maximize our efforts in enabling a growing U.S. launch industry. With this new tool in our toolbox, these tremendously flexible contracts will meet a wide variety of NASA science and technology needs, further enhancing the agency's launch service program reputation as Earth bridges to space. Now, this was said by the Chief Business Officer of Astra. This new contract streamlines the contract process and allows Astra to deliver the most cost-efficient dedicated access among proven launch systems more rapidly than before. And you'll also notice some other big names here of the 12 awardees. We've got Astra, of course. We've got Blue Origin. We've got Rocket Lab. We've also got Space Flight of Seattle. And we've also got Space Exploration Technology Corp's SpaceX of Hawthorne, California. There's also a few others, but definitely very interesting stuff to see. Another thing here is the VADR contract will provide a broad range of FAA, Federal Aviation Administration, licensed commercial launch services capable of delivering payloads ranging from CubeSats to Class D missions to a variety of orbits. You'll notice that recently on the charts, Astra is actually in an uptrend, as well as a lot of the smaller caps lately. A lot of tech has actually been coming up lately. And looking at the MACD, we're looking bullish. Looking at the RSI, we are still pointing up, although we're getting near overbought. So we'll see if we move a little bit further. It might need to consolidate sideways for a little while before moving to the upside. And keep an eye on this trend line. We may continue up it. I believe we're near the bottom. We may retest some lower levels, but I think the worst is behind us, in my honest opinion. I could be wrong, however. All right, now next up, I just want to look over the chart on bngo, bionano, genomics, and then we're going to get into the new stock here that I'm going to talk about. Now, first off, we do have higher lows forming. We are looking pretty bullish, looking green on the MACD and curling up. RSI still pointing up. And looking at it closely, you'll see that we did close above the 3 EMAs, the 8, the 12, and the 21, and that's a good sign for bngo. I honestly love it at this price, and I have been adding to my position slowly but surely. And yeah, there's a lot of small caps out there that are definitely worthy of just, continuing to average in. We are starting to look a little more bullish. I think that downtrend is coming to an end, and we're going to be turning around soon. Now, of course, there could be a negative catalyst or positive catalyst that can change the trajectory of any of these stocks. We might have more fears of the Fed. We might have even more rates in the coming months. If we get one less rate hike, or if, the percentage is less than expected, we can likely see these move higher. But in the inverse, if, we get higher rate hikes and more rate hikes, then we will likely see a lot of these small caps have a lot of trouble. You'll notice here that we came down to this base. We came down around this 180 base. We bounced. It looks like a double bottom to me. Came back up, came down, retested, and bounced again, forming those higher lows. And I think this stock's looking really good at this current price. I'm more than happy to add to bionano genomics. And for me, this is my one genomics play. And I've been holding this for about a year now. I did get in last year before the huge run-up, took some profits. I made the mistake of buying the dip, but I have been continuing to average down and build out my position. My goal with bngo is to acquire as many shares as possible, while still keeping a reasonable weighting in my portfolio, not just going all in. Don't ever go all in on one stock. That's extremely risky. I'm keeping this to a few percent of my portfolio, but it is one high conviction play of mine that I'm just long-term holding. And I believe it will pay out. Looking at it from a 4 to 5 year time horizon and looking at it short term, we are looking a little bit bullish. I think we may see some movement here on this one. And now let's get into the new stock here. And the new stock I want to talk about is none other than Nano Dimension, NNDM. And a lot of people have actually been talking about this one. I've had requests to cover this one. I've noticed on other YouTubers' channels people asking to cover it as well. And you'll see here that they have 1.4 billion in cash. However, their current market cap is considerably under that. Now, of course, you might be saying, well, okay, maybe they have a lot of debt, maybe they're potentially not profitable. And yes to one of those things. Yes to the fact that they're not profitable yet, but they don't have a lot of debt. And I'll leave you guys a link so you can read over this as well. I'm just going over a few key points here. You'll see that stated here, the company ended the quarter with a cash and deposits balance of 1.385 billion, so about 1.4 billion, like they said. And total operating loss for the third quarter was 24 million. Okay, so they are operating at a loss. And that's one thing to be aware of. It is one thing to consider that they are operating at a loss, but that $24 million loss, it may go up a little higher, no big deal. I think 24 million, I mean, they've got plenty of potential cash burn ahead of them. One thing I wanted to quickly go back to here is that they have a probability estimate timetable with 1 being very low, 5 being very high, and you'll see the probability of not having enough cash to fulfill long-term business plan is a 1, so very low. And a probability of needing to raise more capital, meaning diluting shareholders, issuing more shares, is also very low. And you'll see they have a huge amount of cash. So that's one thing to consider with this company. It's very unlikely that you're going to be worrying about dilution. However, if the stock does run up hugely like it did last year, it's very possible that they'll take advantage of it. I wouldn't put it past them, especially being that I believe they diluted 3 times. I was in this one in like the 3s or 4s. It ran up to like 6. They diluted, ran back down, ran up again, diluted again, and then they diluted again one more time, I believe in the teens. And then it's just been down, floundering around ever since. This was a Cathie Wood stock, and just the negative sentiment towards her fund, and also the negative sentiment towards tech and small caps lately, has definitely beaten this one down. And I'm going to take advantage of this one. Now, hopping back over here to their SEC filing, we will see one more thing. Looks like their research and development expenses are rising, but that's not too concerning to me, being that they just have a huge amount of cash on hand. Total revenues was 1.3 million. Not very much, although it is increasing. So that is good to see. The revenue is increasing, although this will be relatively slow. I do think they have plenty of cash on hand, considering how much time it's going to take for them to get to a nice amount of revenue where they will become profitable one day. I think that it could be a year, could be 2 years, but they do have plenty of cash on hand, and to me that's not really a worry. Looks like a pretty solid stock to me. We've got a total debt of 3.7 million. Be aware that these are in thousands, these numbers here. We've got assets of about 689 million. We've got total liabilities of 22 million. Looks pretty good there. Now let's hop over and check out the technicals real quick. Now jumping over to the technicals, I'm here on the 1 month, 30-minute candles. We do have a recent uptrend, so keep an eye on this. We are over the EMAs. MACD is curling up and we're looking green there, looking bullish still on the MACD, and the RSI is rising. However, one thing to take note of is when you go to the short term, like the 5-day and the 1-day, the RSI is relatively overbought. So be aware of that. It may come down sometime this week. So keep an eye on this. I think this is a solid stock to own. And yeah, just be aware that they are operating at a loss. However, they do have a lot of cash on hand. That might explain the discrepancy with the fact that their market cap is lower than their cash on hand, just being that they're not a profitable company. However, I'm very confident that, their cash burn is considerably smaller than the amount of cash they have on hand. So, I mean, you're looking at potentially years before they're going to need to dilute or need to acquire more debt, any of those kinds of things. I think this is a solid stock to own. It is, of course, risky. They aren't profitable, obviously, but I do like it at this price. And remember last time we were right around here before running up to the teens. Of course, history doesn't dictate future results, but it is one thing to consider. There's a lot better risk to reward at this price than when we were in the 6s, 7s, 8s, so that's one thing to think about. But that's basically all I got for you. Make sure you like and subscribe. I put out videos every day. And until next time, take it easy.